Hey guys, this is a market update. The macro cycle is playing out just as it always does, and so is the Bitcoin cycle. We'll look at that in this video. This is the US debt maturity wall from Joe Consorti. As you can see over the next few years, a lot of debt outstanding that needs to be refinanced, right? Because the US federal government cannot pay for this because it doesn't earn enough in tax receipts to pay for all its outlays. So it must keep creating debt. This has to be refinanced, but they don't want rates to be at 5%. And so they're not going to be at 5%. Rates are going to be 2.5%, maybe 2%, right? That's where they really want rates, maybe even a little bit lower. That's where they want them. That's where they'll be. Ironically, that is the bull market that we are going through right now. Bitcoin and other risk assets priced all of this in beforehand, 6, 12, 18 months beforehand. This is the bull market because all of this stimulus that is coming from China, we've just seen over the last 24 hours, and rate cuts, that is inflationary. That is this bull market. And as that comes out in the data in 12 to 18 months time, the Federal Reserve will say, we need to tighten things up again. And that's the next bear market. The market will do great over the next 12 to 18 months. Some new entrants will come in, FOMO in at the top, and then get drawn down on 50 to 80% and say it's all a scam, and most of them will leave. The real investors will stay around and actually make returns over the long term. Bitcoin is still just ranging. I believe that the ETFs probably put us, much higher than we should have been in a normal cycle, right? So if the Bitcoin price actually just came like this, and maybe, it came up to this price, the kind of sentiment around that would be very different. The ETFs pushed us probably a little bit too high, and then we've come down. But look, 63,000 ranging around for a very long time. It's not exactly bad news, is it? Especially if you're a longer term investor who's been investing through a few bear markets. So yes, we've maybe double bottomed here. You can see that. So maybe a support zone there, a resistance zone right here. We're just ranging, waiting for the election, waiting for rate cuts to come, seeing what's happening. There is some trepidation in the market that this slowdown may cause a recession. We're kind of in one, right? We all know that. We all know that we have to get out of the fiat currency. We have to invest in something else. So it's not exactly a choice between should I stay in dollars or should I buy Bitcoin here? It's I'm buying Bitcoin or the S&P or the NASDAQ. And so which one's going to outperform over a 10-year time horizon? It's obviously Bitcoin. What else is there to invest in other than this asset? If you do trade cryptocurrency, check the link down in the description to Bybit. That's the exchange I use. If you make a deposit on there and trade, you can get up to $30,000 as a deposit bonus to trade with. So check the details via the link below. They do a lot of other offers as well. They do a crypto card as well, where you can spend crypto or fiat currency from the card. So I use that platform. Link down below to a deposit bonus. Bitcoin reacts to the macro cycle and financial conditions. Financial conditions are manipulated by central banks and central actors in order to get the things that they want, which is essentially helping the US Gov finance the fact that it doesn't take as much in receipts as it promises to spend out. That's an issue. It's a fundamental issue that doesn't seem to be getting fixed, and no one wants to fix it. All of the election candidates don't say anything about actually fixing this issue. So that's going to continue, and that means the currency is going to get hit. We all know we have to get out of the currency. This is the fastest horse. As we can see, these cycles play out. So we have to make sure that when Bitcoin is in a drawdown cycle, we're very active buying it because they're the lowest prices that we get. We know that it's going to outperform fiat currency. Of course it is. The fiat currency is designed to debase itself, designed to lose value. Everything goes up in fiat currency terms. Even sausage rolls and bacon sarnies go up in fiat currency terms, right? Sausage rolls are more expensive now than they were 10 years ago. So you don't have to be a big investor to actually make money when you're valuing stuff in the fiat currency. Just buy a bunch of sausage rolls, put them in the freezer, and you actually make money on them, right? So we know that investing and making returns, if you're valuing stuff in fiat currency, is as easy as going to the supermarket and buying a bunch of, crisps and drinks and sticking them in the freezer and then waiting. You can outperform fiat currency by doing that. So it's not about making returns. It's understanding what is the best thing to invest in. This asset is giving much higher returns than everything else based on its risk portfolio as well. The Sharpe ratio of Bitcoin is the best in the industry. That means the risk-adjusted returns of this asset is number one. So you have to invest in it. So as we can see, the macro cycle goes up and down like this. Financial conditions get loose and tight. So we can take advantage of those cycles to make better returns in the world's best performing asset. As you can see right here, financial conditions in white are getting very loose and very easy. And that means Bitcoin is going to go through a bull market. It's very, very simple. We can see each and every cycle this happens. As financial conditions ease, Bitcoin has a huge bull market. You can see that in white as it goes down and Bitcoin goes up. As financial conditions ease and go down, Bitcoin price goes up. As financial conditions ease, Bitcoin goes up. And the current cycle right here, as financial conditions are easing, Bitcoin goes up. If you just dollar cost average Bitcoin, the annual return you're getting right now, a 4-year CAGR is 50% a year. There's nothing else you can buy large scale with the best Sharpe ratio in the world that's going to give you that. This is the best performing asset. There is nothing else to buy other than this asset. This is Bitcoin versus the S&P though. So this is the S&P valued in Bitcoin. So how much Bitcoin should you buy? Well, how much do you want to outperform by? Why should you invest in the S&P? Well, it's a little bit less volatile and you pay for that with much worse performance. So I'm talking about the Sharpe ratio of Bitcoin. It's the best Sharpe ratio, which means a risk-adjusted return, which means the volatility that you have to go through is paid back way more by the returns that you get in Bitcoin. What else can you invest in? If you're looking at the S&P, what you're putting your money in there, and you've got this other asset that's like outperforming it 4 to 5x. You know what I mean? Like you can get drawn down 20, 30% in the S&P as well. So what's the difference? And this thing just bounces when the bounce inevitably occurs when they stimulate again. So why invest in the S&P? Why bother? I don't. What's it giving you? What's it giving you? Yeah, the S&P. Okay, great. So what? Right? So what? Bitcoin basically it goes up and down at the same time, right? Within 6 months you'll see drawdown. Another push to the upside. So why invest in the S&P? I don't understand. What is it about that that's actually a better investment than BTC? Unless you don't trust BTC or you don't think it's coming. So this is the S&P valued in Bitcoin. You can see that this Bitcoin's just outperforming it. So we are essentially coming into this level. I don't think Bitcoin's overbought in terms of it, right? You can see how far away from this trend line that we get in bull markets. Bitcoin isn't there now, right? If we got up here, then you're saying, okay, Bitcoin's maybe a bit overvalued in relation to its trend. Why invest in anything else? If this thing is going up 40 to 50% a year, it's outperforming everything else. What else is there to invest in? There's nothing else to invest in other than this asset. It's outperforming. It's got the best Sharpe ratio. Every chart shows you that it's just monetizing or taking performance away from other assets. So why invest in anything else? I think the most broad diversified thing you can invest in is Bitcoin, right? Not the S&P, not the NASDAQ, certainly, not other indexes. They're just not going to work, right? So the sweet spot and the trade of our generation is that we have the broadest, most diversified financial index in the investing landscape right here. That is no one's liability. It's not debt. It's not equity. It's broad. It's worldwide. Everyone can invest in it. It indexes the financial health of everyone, no matter where they are in society, around the world. This is it. And it's annualizing at 40 to 50% right now. It's just not going to last. The trade's not going to last. And so the trade for me is not buying at 63.5 and selling at 75. The trade is, I'm just going to buy this until it's annualizing at like 12%. And then I'm going to have to invest in something else, I guess. That's the trade, right? It's like a once in a lifetime opportunity. And it's running out. 40 to 50% it's annualizing out right now. Back here, it was like hundreds of percent a year. Right? So the world is cottoning on and they're taking the returns away. It's still outperforming, but it's not going to outperform like this forever. And so this is the trade of our generation. Multiple years. That's the capital that you have as you get older in life for your retirement fund. If you do trade crypto, Bybit deposit bonus down in the description. The crypto investor course will be updated this autumn as well, so you can check the link for that down below. I'm James, this is MoneyG. Cheers for watching, and I'll see you in the next one.